Before a trader blows up their account, before they make that one decision that undoes months of progress, something happens in the mind. It's not bad luck. It's not just the market turning against them. It's the quiet, invisible moment where the trader becomes their own worst enemy, where they set a trap for themselves without even realizing it. You might think self-sabotage happens in a single reckless trade, but it doesn't. It starts long before you click the buy or sell button. It starts the moment you allow your brain to mix two completely different worlds, the market's reality and your personal reality. Here's what I mean. The market doesn't care about your bills. It doesn't care that you had a bad day. It doesn't care that you've been losing for a week and need this trade to work. But your brain cares about all of that. And when the part of your brain that trades money starts listening to the part of your brain that feels pressure, fear, or greed, you've already lost, even before you open the position. This is where self-sabotage hides, not in the trade itself, but in the state of mind you're in when you decide to trade. Most traders think they lose because their analysis was wrong. They tell themselves, I should have used a tighter stop loss, or I picked the wrong level. But if you peel back the layers, you find something else. They knew the rules. They knew the risk. And still, they ignored it. That's not bad strategy. That's bad psychology. The truth is, the human brain is wired to avoid pain and chase pleasure. And the markets are the perfect playground to trick both of those instincts. If you're in pain from a loss, your brain tells you to make it back. If you're in pleasure from a win, your brain tells you to do it again. Both lead to the same place, trading outside your plan. This is why the most dangerous moment for a trader isn't when they lose. It's when they feel an emotional spike, good or bad. Because in that state, your mind is no longer analyzing the market, it's negotiating with it. Let's say you've been losing all morning. You're frustrated. You spot a setup that isn't exactly what your system calls for, but you convince yourself it's close enough. That's self-sabotage in its purest form. Not because the setup fails, but because you've just trained your brain to ignore your own rules. The next time will be easier. And the time after that, automatic. You've built a habit of self-destruction. Or maybe you just had your biggest win of the month. You feel unstoppable. You take another trade, not because it's in your plan, but because you're convinced you can ride the high. That's the same trap. The emotional state changes, but the mechanism is identical. Your trading decisions are being driven by you, not the market. The dark side of trading psychology is that you can be aware of all of this and still do it. Self-sabotage isn't about ignorance. It's about a disconnect between what you know and what you do. And the bigger the gap between those two, the more dangerous you become to yourself. Why does this gap exist? Because the brain doesn't operate in a single layer. There's the conscious mind, the part that knows your strategy, your risk limits, your analysis. And then there's the unconscious mind, the part that stores your fears, insecurities, and hidden motivations. When the unconscious mind decides it wants something, to win back a loss, to prove you're right, to feel in control, it will override the conscious mind without asking for permission. And here's the part that most traders don't realize. The unconscious mind speaks in feelings, not logic. Which means you can be absolutely certain that you're making a rational decision, when in reality, you're just rationalizing an emotional impulse. That's why you see traders do the same mistakes over and over, even after swearing they'll never do it again. They're trying to fix a psychological problem with logical solutions, like tweaking a strategy, adding an indicator, or setting a stricter stop. But until they address the emotional trigger underneath, the sabotage will keep coming back in new forms. Think about it. How many times have you caught yourself making the same type of error and thought, I know better than this? That's the voice of your conscious mind, realizing too late that your unconscious mind was already in control. Self-sabotage also feeds on something subtle: identity. If deep down you don't fully believe you're capable of being a disciplined, profitable trader, you will unconsciously act in ways that match that belief. If you see yourself as someone who always messes up at the last minute, your brain will make sure that pattern stays true. This isn't magic, it's self-consistency. Humans hate to contradict their self-image, even if that self-image is destructive. And this is where the spiral begins. A trader has one bad emotional trade. That trade reinforces a negative belief about themselves. That belief makes them more likely to repeat the same mistake. Over time, this becomes their normal state, not because the market beat them, but because they trained themselves to lose. The most brutal part? Self-sabotage is invisible until you zoom out. In the moment, every decision feels justified. Every trade feels like the right one. But if you look at your last 50 trades and see that the losses come from breaking your own rules, you'll realize you were the enemy all along. So how do you break it? Awareness is the first step, but not the last. You can't just catch yourself. You have to rewire the habit. That means deliberately interrupting the cycle the moment you feel an emotional spike. That means walking away even when you feel like you need to take the trade. That means proving to your unconscious mind that you are capable of making decisions that contradict your impulses. And here's the uncomfortable truth. Most traders will never do this. Not because it's too hard, but because it forces them to give up the part of trading they secretly love: the rush, the adrenaline, the illusion of control. If trading is your escape from boredom, stress, or insecurity, then fixing your psychology will feel like stripping the fun out of it. And many traders would rather lose money than lose that feeling. That's why 90% of traders are trapped here forever. They're not just fighting the market, they're addicted to the game they're losing. Most traders believe the enemy is the market. They believe it's the unexpected spike, the news release they didn't see coming, the fake breakout that wipes them out, or the sudden candle that ignores all logic. They think sabotage comes from outside, from forces beyond their control. But the truth is far less comforting. The real enemy doesn't sit on a chart, it lives inside your own mind, quietly influencing every decision, every hesitation, and every moment of overconfidence. Self-sabotage isn't dramatic. It's not a lightning strike that you see coming from miles away. It's more like rust on a ship. You don't notice it at first, but slowly, silently, it eats away at the structure until one day something breaks. In trading, that rust is your subconscious belief system. You can have all the technical knowledge in the world, memorize every candlestick pattern, and study every risk management rule. But if a part of you deep down believes you don't deserve to win, you will unconsciously create situations that make you lose. It's rarely obvious in the moment. You miss an obvious entry, and instead of accepting it, you jump into the very next candle that moves, just to feel like you're not left behind. You adjust your stop loss under the pretense of giving the trade room to breathe, when the truth is, you're simply avoiding the discomfort of being wrong. You cut profits short because you're afraid the market will turn and take them back, even though your plan told you to hold. These moments feel like smart decisions in real time. They feel like small adjustments, but they are really small betrayals. Betrayals of your own plan, your own rules, your own judgment. And the worst part is that they don't happen all at once. They creep in. A stop loss moved here. A premature close there. A little more risk, just this once. Until one day you look at your account and realize you've undone weeks of progress in a single session. The dangerous part about self-sabotage is that it's often done in the name of protection. Your brain isn't trying to ruin you, it's trying to keep you safe. But the brain's definition of safe isn't aligned with your goals. The brain cares about survival, not success. And survival, for the mind, means staying in familiar territory. If you've spent years losing, struggling, or just breaking even, your brain has quietly labeled that as normal. That's your safe zone. It's not pleasant, but it's predictable. And the mind loves predictability. This is why, the moment you start to break out of that cycle, when you finally start building momentum, your brain sends signals to pull you back. Doubts, overthinking, a sudden urge to change strategies, reckless risks that just happen out of nowhere. It's like climbing a mountain and then feeling a strange pull to go back down, even though you know the top is within reach. The brain doesn't care about the view from the summit, it just knows you've never been there before, and to your instincts, new territory equals danger. Here's the rare truth. Most self-sabotage doesn't happen in losing streaks, it happens in winning streaks. Losing traders don't blow up because they can't handle losing. They blow up because they can't handle winning. It's easy to underestimate how threatening success can feel when it doesn't match your self-image. If your identity has been built around being almost there, but never truly successful, Consistent profits feel foreign, almost undeserved. And when something feels undeserved, you'll unconsciously find a way to get rid of it. That's when traders start over-leveraging, ignoring stop losses, taking trades out of boredom, or switching to completely different setups for no reason other than to sabotage the stability they've created. It's a hidden reflex. You see a bigger number in your account than you've ever seen before. Instead of feeling safe, you feel tension. It's like holding something fragile and precious. You become afraid you'll drop it. That fear drives you into hyper-control, and hyper-control often leads to interference. You close trades too early. You widen stops without logic. You take setups you never would have taken before, all because some part of you is terrified that the market will take back what it shouldn't have given you. The irony is that it's not the market taking it, it's you. The mind also plays a different trick. Selective memory. After a bad trade, you remember every detail, what you did wrong, what you should have done, and how you'll avoid it next time. But after a good trade, you tend to minimize it, forget it, or chalk it up to luck. You downplay your wins because they don't fit the narrative you've built about yourself. And if wins don't become part of your identity, they never feel safe. They always feel like temporary accidents, which means your brain will never fully support you in keeping them. The only way to break this cycle is to rewire what normal means for you. And that's harder than any technical skill you'll ever learn in trading. It's not about reading more books or watching more strategy videos. It's about proving to your mind, over and over, that success isn't dangerous, that profits are safe to keep, and that being wrong on a trade doesn't mean you're unsafe as a person. You need to experience small, controlled wins repeatedly until they feel as ordinary as breathing. Only then will your brain stop treating them as threats. But this rewiring isn't instant. You can't override years of subconscious programming with one good week in the market. You have to approach it like training a wild animal. It doesn't trust you at first, and it reacts to any sudden move. The brain is the same way. It resists. It clings to the old patterns because that's where it feels in control. So you have to be patient. You have to keep showing up, executing your plan exactly, and letting both wins and losses exist without emotional overreaction. That's how trust is built. The tragedy is that most traders will never get here. They'll keep chasing the next magic strategy, the perfect setup, the one thing that finally makes it easy. They'll think self-sabotage is something that only happens to undisciplined traders. They won't see that it's a built-in human mechanism that works against anyone trying to change their financial identity. And so, even if they stumble upon the best system in the world, they'll still find a way to destroy it, because the market was never their biggest opponent. Their own mind was. Self-sabotage is not a sign you're broken. It's a sign you're running a survival program that simply doesn't fit your new goals. The good news is that you can reprogram it. The bad news is that it requires facing the truth. Success will feel uncomfortable until you make it familiar. And until you do, every breakthrough will come with an invisible pull backwards. That's not the market being cruel. That's you, unknowingly protecting yourself from the very thing you've been chasing. Most traders don't realize that self-sabotage isn't always loud or obvious. It's not just blowing an account in one reckless move or revenge trading after a loss. Sometimes, self-sabotage is quiet. It hides behind what feels like discipline. It disguises itself as patience. It even masks itself as learning. And because it's subtle, it's far more dangerous than the obvious mistakes. You can tell when someone takes a huge loss. It's visible, and it forces reflection. But when someone slowly erodes their edge without noticing, there's nothing to trigger alarm. This is the form of sabotage that turns promising traders into permanent beginners. The trader feels like they're improving, but month after month, their results show otherwise. And yet, because they aren't blowing up, they believe they're safe. They're not. They're stuck in a slow, grinding death of progress. One of the most common ways this happens is through mental rehearsals of failure. You think you're preparing for the worst-case scenario, but you're actually wiring your brain to expect it. You picture the trade failing before it's even placed. You go through the motion of protecting yourself, telling yourself you're being cautious, but deep down, you've already accepted loss as the default outcome. The mind moves toward what it expects. When expectation is negative, execution follows. Another subtle form of sabotage is comfort in chaos. Some traders unconsciously keep their trading environment stressful because a part of them is addicted to the feeling of fighting against the odds. They'll make last-minute decisions, change their plan mid-trade, or switch markets impulsively. If you ask them why, they'll call it adapting. But in truth, they're creating instability because they don't know how to function in calm, controlled conditions. They've made the rush of uncertainty their baseline, so consistency feels boring, and boring feels wrong. Then there's the sabotage of over-preparation. At first, this sounds like a positive trait, but over-preparation often comes from fear, not discipline. It's the endless search for perfect certainty before taking a trade. Reading one more news update, waiting for one more confirmation, adjusting one more indicator setting, all while the market moves on without them. On the surface, it's patience. In reality, it's avoidance. Avoidance dressed up as diligence. Fear of success is another rarely talked about driver of sabotage. For some traders, reaching a goal brings discomfort because it threatens their self-identity. If you've always seen yourself as the one still trying, actually achieving consistent profits can create a crisis. Suddenly, there's more responsibility. Suddenly, the expectation is to maintain that success. And if deep down you don't believe you deserve it, you'll subconsciously find ways to lose it. It's the mind's way of returning to familiar ground, even if that ground is failure. Another layer is sabotage through misplaced loyalty. Traders sometimes stay tied to strategies, mentors, or communities that no longer serve them because leaving feels like betrayal. They know the method doesn't fit them anymore, but they keep applying it out of attachment. Or they follow advice from people they trust, even when their own analysis says otherwise, because challenging that advice feels wrong. In the end, loyalty costs them more than any bad trade. Perhaps the most insidious form of self-sabotage is narrative protection. You build a story about why you're not succeeding yet. Maybe you're still learning, or waiting for the right capital, or fine-tuning the strategy. That story keeps you safe from the pain of confronting the real reasons for stagnation. But it also keeps you locked in place. Because if your story is that you're not ready yet, your actions will always align with being unready. Changing the narrative requires admitting that the old one was an excuse, and that's a hard truth to swallow. These patterns often work together, feeding off each other. A trader overprepares because of fear, then delays action until they miss the move. Missing the move justifies more preparation next time. Or a trader creates chaos, which leads to bad decisions, which reinforces the belief that they need to try harder, which leads to more chaotic overtrading. The loop continues until something breaks. The key to breaking it isn't about adding more tools or refining the technical side. It's about becoming brutally honest with yourself about the ways you quietly undermine your own progress. It's recognizing that self-sabotage is not always a dramatic blow-up. It's often the 1,000 small decisions you make without noticing, each one slightly off from your stated plan, each one taking you further from where you want to be. When you strip away the noise, self-sabotage in trading boils down to this: the mind seeks familiarity. And if failure, inconsistency, or underperformance is what's familiar, you'll unconsciously recreate it. The job of the trader is not just to learn how to win, but to make winning feel normal. Because when winning feels normal, sabotage has nothing to cling to. Most traders think self-sabotage is something they can fix with a single piece of advice. They think it's just a bad habit, a couple of bad trades, or maybe a lack of discipline that can be patched up with a new trading plan. But the truth is, self-sabotage isn't something that lives only in your trading, it lives in you. And until you're willing to confront that, it doesn't matter how perfect your strategy is, the result will be the same. The dark side of this is that your mind can make you fail in ways you won't even recognize as failure. Sometimes, it's not an impulsive trade or a blown stop loss. It's trading correctly, but at the wrong time, with the wrong size, or in the wrong market conditions. You'll follow your plan perfectly, but something deep inside makes sure you do it when the odds are tilted against you. You'll feel like you're doing everything right, yet your account keeps shrinking. That's the most dangerous kind of self-sabotage, the one that hides behind the illusion of discipline. The reason this happens is that your brain craves equilibrium. If you've spent years reinforcing certain beliefs about money, success, or even yourself, Your subconscious will work tirelessly to keep you in that familiar place. If you believe, even slightly, that you're not meant to be wealthy, your subconscious will create ways for you to prove yourself right. It will let you get close to success, but not close enough to stay there. This is why so many traders see an account double, then watch it fall right back to where it started. It's not the market bringing them down. It's their mind pulling them back to their baseline. This baseline effect can be subtle. You might think you're aiming for $10,000 a month, but your internal thermostat is set at $2,000. Anything above that feels unfamiliar, and unfamiliar often feels unsafe to the subconscious. So it engineers mistakes. You'll have one more trade than usual, ignore one signal you'd normally take, or adjust your stop just a little wider than you should. You'll call it bad luck, but it's not luck, it's programming. The brutal truth is, this programming is often older than your trading career. It comes from childhood, from family patterns, from the way you saw money being handled when you were growing up. Maybe your parents fought about money. Maybe you were told that rich people are greedy. Maybe you learned that every time you had extra, something bad would happen, and it would be taken away. Your trading account doesn't erase those lessons, it magnifies them. Every tick on the chart becomes a trigger. Every loss feels like proof, and every win feels like a setup for disaster. To escape this, you have to be willing to do the one thing most traders will never do: detach your identity from your results. As long as a losing trade feels like a personal failure, you'll be vulnerable to self-sabotage. Because the moment you start winning, your subconscious will feel that threat. If winning defines you, then losing destroys you. And the mind will always try to protect itself from destruction, even if it means quietly steering you back to losing. The paradox is that the best traders don't tie their self-worth to the outcome of a single trade or even a single month. They see the market as a place to express a process, not to prove themselves. That's why they can take a loss without spiraling. That's why they can follow their plan even after a string of losing days. It's not that they don't feel the sting, it's that they've trained their mind not to see it as an attack on who they are. But here's where most people get it wrong. They try to think positive or affirm success without changing the deeper patterns. You can't talk your way out of self-sabotage if your actions are built on an old script. You have to rewrite the script entirely. That means identifying the triggers that make you deviate from your plan and then systematically removing their power. It might mean stepping away from trading after a big win to break the pattern of overconfidence. It might mean deliberately trading smaller after a loss to retrain your brain to feel safe staying in the game. These aren't quick fixes, they're rewiring steps. Self-sabotage also thrives in isolation. When you trade alone, it's easy to justify small deviations from your rules because no one is watching. That's why accountability, whether through a trading journal, a mentor, or even a peer group, is such a powerful antidote. When you know you'll have to explain your trades to someone else, it forces you to confront the patterns you'd rather ignore. It puts your subconscious tricks under a spotlight. The reality is, the market isn't out to get you. It's not hunting your stops or reading your mind. The only enemy is the part of you that's not ready to handle the success you're chasing. If you can dismantle that, everything changes. Suddenly, you're not fighting against yourself every time you sit down at the charts. You're free to just execute. But dismantling it means accepting that you are both the cause and the solution. That's a hard truth to face, because it strips away all the excuses. You can't blame the broker, the news, or the volatility. You can only look in the mirror and decide whether you want to keep living in that loop. Here's the final irony. Once you break the self-sabotage cycle, trading becomes boring. The drama disappears. The emotional highs and lows fade. You stop feeling alive every time the market moves in your favor. And that's exactly when you start winning consistently. The same lack of emotion that used to feel empty now feels like freedom. You're no longer playing to feel something, you're playing to get paid. The dark side of trading psychology isn't that it can destroy you. It's that it can quietly keep you exactly where you are, forever. Most traders never even realize it's happening, and that's why they fail. But for the few who wake up to it, the game changes completely. If you've made it this far, it means you're already ahead of most traders. You've looked at the part of the game no one likes to talk about, the part that lives inside your own head. Now the only question is, will you do something about it? If you found value in this, subscribe to the channel. Every week, we go deep into the real mental game of trading, the parts that actually decide whether you win or lose. And I want to hear from you. What's one pattern in your trading you know is holding you back, but you've struggled to break? Share it in the comments. Let's talk about it.